This information was inspired by the subprime primer on YouTube. Our thanks to the authors of that document. The first scene takes place at Mortgages R Us, where a first-time homebuyer obtains a mortgage. The second scene shows a banker at Pandora Bank and Trust, who issued the actual loan to the first-time buyer. The third scene is between two investment bankers who purchase the mortgage from Pandora, package it with other loans, and resell it as a security to investors. The final scene shows a disgruntled investor confronting the investment banker. Please enjoy the show.
Hi. Welcome to Mortgages R Us. How can I help you?
I need a mortgage.
We can do that. Why don't you sit down?
Okay, thanks. I want to buy a house, but I haven't saved up any money for a down payment.
That's not a problem. We know that the value of your house will always go up, so we don't require down payments anymore.
Great, but I can't really afford much for the monthly payments.
That is not a problem either. We can give you an interest-only loan or a variable rate loan with a low payment for a few years. We'll just raise the payments later, and you can worry about it then.
I guess that's okay. I'll worry about it in a few years. One other thing. My employment situation is tenuous. I don't think my company will verify my employment.
That is still no problem. We can give you a liar's loan in which we take your word for everything you tell us about your job and income. You look honest.
Wow. I really didn't think it would be this easy to borrow money from you guys. I can't even get a credit card.
Well, you're not really borrowing from us. A bank will lend you the money. We are just the broker, so I get my commission. Whether you make the payments or not, so why do I care? If it were my money, I wouldn't lend you a nickel.
Okay, let's get started. And thank you for making the American dream possible for me and others with poor lines of credit, insufficient savings, and the inability to verify employment.
Boy. We now have a lot of these subprime mortgages on our books at Pandora Bank and Trust. I need to get these off our books or we could run into trouble back at home tree. I'll call those investment bankers. They'll be able to do something with them, and I'll get the cash to make more crappy loans. We have to keep the cycle going, or I'll never achieve my dream of owning real clothes. Also, if I don't get these crappy loans off the balance sheet, my boss will send me to Guam. One way.
Hey, we got a pretty good price buying those subprime mortgages from Pandora, but now we need to get rid of them. They are crap, and we at the investment bank don't like to hold crap.
Sure, but who would ever be dumb enough to buy this junk?
Well, we won't sell them as mortgages. We'll create a security called a collateralized mortgage obligation, with these mortgages as collateral.
That doesn't do anything. Everyone knows that the collateral is still junk.
Only if you look at them individually. Of course, some of the mortgages will go bust, but certainly not all of them. So some of this debt is okay. Besides, the value of homes always goes up, and the homes are collateral behind the mortgages, which are collateral for the CMOs. If you look at it the way, they are not total crap.
Crap is crap.
Here's what we'll do. We bundle the mortgages, and create CMOs with different tranches. The first tranche will get paid first, the second tranche paid second, and so on. Thus, since the first tranche gets paid first, they have little risk of default. The risk only increases as you go into the lower tranches.
I get it. Then we just pay a slightly higher interest rate to provide an incentive for buying the riskier tranches.
Now you are getting it. We'll get AIG to provide bond insurance for the higher tranches. Then the rating agencies will give us an investment-grade AAA rating for the top tranche, and decent ratings on other tranches.
But I still don't know who will buy these.
I'm sure our sophisticated institutional clients will be interested. With treasury rates so low, they are desperate for new investments with a decent return. We can take these junk mortgages and make AAA investment securities paying 5%. Treasuries are what, 2%? Pension funds and municipalities need better returns. We are performing a public service for some small village in Scotland. It's magnanimous, really.
I understand the higher tranches, but who will buy the bottom tranche, since that has all the risk?
Well, no one will want to buy that. You said it yourself, crap is crap. We'll keep that for ourselves, and pay ourselves a nice fat interest rate. Then we'll buy some credit default swaps to cover our risk of defaults. We'll do just fine.
This is all starting to make sense. I like Kool-Aid. The problem is that we are using these crappy mortgages as collateral for the new securities, but the crappy mortgages are still on our balance sheet.
Of course not. We'll set up an offshore shell company, a special purpose vehicle, just to hold these mortgages. The junk is on their balance sheet, not ours.
But don't we need to disclose that? The special purpose vehicle is related to us. Certainly there are accounting regulations that would require us to consolidate that entity, or at least disclose its balance sheet.
Well, obviously you don't know your financial regulations and accounting rules very well.
Kool-Aid. Yum.
Hey, what's the deal? We're not getting our monthly payments. You wouldn't return my calls. You wouldn't respond to my emails. Finally, I flew across the Atlantic to track you down here in your office.
Yes, I meant to call you about that, but it has been hectic around here. Apparently the jerks who took out the mortgages securing your investment aren't able to pay them off.
Wait a minute. We bought the investment-grade security. AAA rated. The safe one. We are supposed to get paid first, so no risk.
Well, unfortunately the underlying loans were a lot crappier than we originally thought, and there is pretty much no cash coming in the door to pay anyone. I assure you, we're as disappointed as you are.
Disappointed? Bites my haggis. You said that housing prices would always go up and that borrowers could always refinance, so there was no risk. Worst case, the banks foreclose and use the money to cover the mortgage default. What happened?
Yes, I guess that was a bad assumption. Hindsight is 2020.
Bad assumption, my frigid Scottish ass. What about the rating agencies? They said this was AAA, low risk.
Yes, it looks like they screwed up. You bought crap.
But our security was insured. Whereas AIG and the bond insurance.
Are you kidding? There is no way they have enough money to cover this whole mess. They screwed up too.
Well, that's just great, you idiot. So what am I supposed to tell my Scottish villagers?
Tell them you bought crap. And everyone lived crappily ever after. The end.